All right, good evening, guys. Ken at Tortoise Capital. This is the Sunday night strategy podcast for December 13th, 2020. So, Sunday nights, we review the trade frames that were posted by folks in the chat room in Campfire. It occurs to me that what I should be doing on this on the Saturday night session for swing systems is the following idea. So I think what I'm going to do is make Saturdays look like this. So for me, Saturday morning from 10 to about 12 noon, we're going to do the true storytelling the owl roundabout. So we have guys that are getting together roundabout, and we exchange true stories. Oops, sorry. And those are turning out to be really powerful. And then usually between I'm either going to do 0800 to 10, or maybe an evening session for the advanced swing mastermind, and that's the my long-term collaborators and I consider mentors, and that to exchange some ideas. But it also, and then I've been doing a 2000, sorry, that's military time. I've been doing an 8 p. I did an 8 p.m. and it went to about 10 p.m. last night. And I've been doing swing portfolio review. And what it occurs to me is what should be happening is this. I think starting next week, what I'm going to do is invite people to listen in at the 8 p.m. Swing portfolio review. I'm going to summarize. My contribution is going to be to summarize some of these accessible good ideas that come out of the advanced group, and I'll just summarize that for everybody. But for folks that want to attend this one, what I'm going to require is a cover charge. And you're going to have to provide each week that you want to attend one trade frame and be prepared to talk through it in about 3 minutes live on the Saturday night call. And that way, if you want to listen in on that stuff, then you got to produce one trade frame. I will publish the format for that this week, but there's nothing surprising about that. It's going to be the standard. It's going to be the standard trade frame questions with a visual markup of the chart, and then you will just give a 3-minute narration of what you see. You know, it'll be things like, what's the pattern, where's the risk, how would you manage it, do you stop and reverse, where do you add second positions, what's the logic of the trade, and you'll get a chance to practice your elevator speech in doing that. I should have been doing this a long time ago, but this is similar to what we do in the live trading workshops pre-COVID, when every morning before the market opens, everybody gives their elevator speech on their trading plan for that day, and it turns out to be a really powerful way to practice the self-talk that it takes to be professional. So I think that's what the swing sessions on Saturday evening are going to be. And again, you'll get to attend. All you got to do is produce one trade frame and post it. It'll be posted in the chat room, by Friday night, so that I can get them all compiled and built for us. And then I'll make those recordings available to the people who attended. I think that's what we're going to do. We shall see. I may make the recording available to others because a person might want to have been there but couldn't make it. But to get my commentary on it live, then you have to be submitting a trade frame. Okay, so I think that's what we want to do. Pardon me. So yesterday, I spent some time in that swing session, and I was reviewing the swing positions using visual box trade framing, and that's kind of a snapshot trade frame that begins with symbols that look to me to be in a critical state. And so a critical state for me is something where there is a unusually large probability of a big move. When I say a big move, I mean larger than average. And when I say larger than average, what I mean is average plus or minus one standard deviation. That's what I mean by large, abnormally large or big. So the probability of a big move is greater. It's bidirectional. Sorry. So bidirectional in a short period of time. So if price moved like this and then kind of got into this sideways quiet channel, then there's going to be, and this is abnormally compressed, then you get a big move in either direction in a short period of time. So we're looking for that kind of, something that triggers it and makes it go. And it's essentially breaking out of that critical state. So something that ends like in a doji would be that kind of a play, where, like in this case, you have price moved well up, came down, started oscillating, and then you notice so price started moving up, down, started oscillating, and then you get this Z3 pinch effect where now this is like everything is, maybe that's one frog box or it's very tight, and then maybe it ends in a doji. And so then some breakout of that box in either direction gives you the direction to play it. And then you might have a second position over here if you took a look like at the peak of the RL10, or in this case, the low of the day might trigger you to put a second position in. And so you get chain trading after that, where you start from that critical state, and then you look at the size of the move, and then you can start trade framing that, because now I know, that's how far the traders could move it, and then that becomes leg one, and then the rest of it now is chain trading, and you're reacting to the traders moving it around. But a critical state is one of those moments where it can go in either direction, and it's like a spring under tension or a frog ready to jump. Yeah, Betty, not a worry. What I'll do is, if you will submit a chart, then I will do the narrative of it. Okay. Or if you want your support guy to do that for his own trading benefit, I'm happy to do that. But if you provide the chart, Betty, I will do the reading. Okay. All you got to do is post it in there, and I'll take care of the rest. So, if you look at the hybrid trading course, in the hybrid trading course we did in 2020, we had tons of examples of visual box trading as applied to the intraday. And one of the reasons that really works well is because you could start the day here, and if you're using that hybrid frog box, you don't even need any of the other indicators. Just when it leaves the box you're in, and then you might have a series of stacked boxes, and without any indicators, you can start playing price action on the basis of that multiples of that minimum manageable risk box using hybrid frog techniques right from the open. And it's a really nice way to get the first 30 minutes, 30 to 60 minutes of the day, just on the basis of price action. And the technique that we demonstrated a lot in the course this year was that if you go back to the previous day and you find the narrowest range, of the Z3s when there's no breakout whatsoever, and you got that little Bollinger Band mean in the middle, and price was contained inside here. That's what we think of that as when price is idling, when there is zero directionality to it. It's just churning along. So if you find the size of that box when there is no directionality, it's just marking time, you find that box from the previous day, and then that becomes a really nice box to use the next day for the MMRB, because that is the most recent example of when there was zero preference between buyers or sellers and low volume. That's just kind of the normal heartbeat at rest. So when you put a box around that from Z3 to Z3, you can think of that as pure noise. There is zero signal. So that's a technique we worked through this year on the day trading portion of hybrid trading. And it allows you to operate in the early stages of the trade without a lot of the indicators getting in the way. Well, this idea works just fine for swing trading as well, as I think I demonstrated last night. So if you go look at the strategy podcast link for December 12th, it's about a 2-hour lesson where I spent a lot of time going through the concept as applied to swing trading, and then we went through about 40 charts last night, showing where I place those breakout boxes. So I just, on a swing trade, what you would have seen me do was something like this, where it may have been at this critical state that the RL10 was crossing here, and maybe price was just juking around right there, and I might put a really tight box on this here, and then when it breaks out, well, the RL10 continues to go up, and then I have my nice tight stop here, I have my breakout position there, and then up it goes, and then maybe this thing goes all the way up, it peaks here, you get an entry and an exit of the dragon, and then maybe it starts to reverse quickly. So this looks like a kata 2 is forming, because you have the swing low here, and you have a swing low getting ready to form right there. So I might just take because this is on a day chart, I might take, maybe that was the last doji right there. I might put a box here to inform my day trading. And so if I'm using 1 hour or 30 minute, I might go long at the green arrow or short at the red arrow when it breaks out of the high or the low of the day. But I may not be ready to commit to a swing trade yet until I look at the weekly chart. What I showed last night is a way to, on a weekly chart, to build these swing boxes. And I said, well, if it keeps moving and breaks out of the hump of the dragon on the swing trade, that's kind of a decisive move, right? So as long as it's inside of this range, I might just be using day trading techniques, using the high and low the previous day, but not committing to an overnight swing position. But if it breaks out of that box on a weekly basis, then that's when I want to, in my technique, I like to keep 1/5 of the day trading position size and then just let that thing go. And then I might come over and find the peak of the RL10 and say, this is where I add my second position if it breaks out of there. So I might have one position here and then two positions there, in the same way that I might pick up a swing short here, and if there was another measured move down here, I might get a second position. And now what we're really doing is using a combination of daily charts and weekly charts to start building our swing positions. And what I showed was last night, I think we went through, once we got the technique down, we did 40 charts in 40 minutes. And those trade frames can last 3 months, depending on how fast this thing is moving and whether it's choppy or whether it's breaking out. But the main idea is that as long as it stays inside this tight range, we're not really interested in a swing trade. But if it does break out of these measured levels, then there's really a large scale move developing on weekly charts. And so we can start adopting a directional bias with weekly swing trading. So for about 1 hour of an investment a week, you can project your trading strategy for swing patterns on 40 different charts 3 months in advance. So you start, you're trucking along here each day doing your little thing. But what you really have also is some kind of long-term swing pattern where you're looking at the first month, the second month, and the third month, and you're having an idea for all those symbols in your stack about which ones are coming into season and which ones are just motoring right along. I like to find ones that have sold off, and now I start getting like that kata number 1 or an owl entry. I love the owl on a weekly. A weekly owl is great because now that gives me plenty of days to be able to watch that thing starting to climb the price ladder to wherever it's going to peak. And so now the turning points in the dragon on weekly charts become really useful for trade framing of future trades. And it tells you when you can start adopting swing trade positions. Of course, you're going to season that with some insight from Risk Z and some sector analysis. But if you go listen to that podcast from December 12th, you're going to be very satisfied. And we make the case for why that may be the long-term system you need to manage core portfolios, because the time investment of 1 hour a week on, call it 40 charts, is pretty time efficient, especially when you're using those same charts, the weekly charts, to come down and inform your day charts, which you're going to take to your 30-minute charts. So I showed trader JG from the Philippines his after action review on some Tesla trades, where he's using daily charts and critical states and then seasoning that with 30-minute charts, and he's up 130% year to date. That is such a good performance for him that it's making him back off a little bit until the end of the year, because he wants to be able to deliver that really strong number for his clients. He's satisfied with being able to deliver 130% a year this year during the COVID to his clients with maximum drawdown of less than 5%. So that ain't bad. So that's what I wanted to say about visual box trading and the podcast from December 12th. It's a pretty good one. And I wanted to just remind you, I'll set out some notes that if you want to get commentary on your swing charts for Saturday night, then the cover charge is one trade frame. And you will narrate it that night. Okay. You're going to find that that really sharpens your sword, by the way. That is maybe the strongest way to improve your technique, is acknowledging it in public and talking through it in front of trusted others. Let's see. All right. Oops, let me finish. That didn't finish drawing on my screen. Stand by. Let's try that one again. There we go. All right, so here's Tesla. Yeah, Ken's got, this is from Ken Hum. And he's got the daily trade. I think he may be ready to get short with a second short there, but he's going to play the daily breakout at about 6, call it 620 for a position. A second position if it breaks the all-time high, and then a third position if it breaks the Z2. And I like that straight up. What makes this one so compelling is it was an inside day on Friday, and it's right inside the dragon. So that's about as perfect a critical state as you could ever expect. And then you'll notice the size of breakouts like this one. When this broke down, when it broke below the previous day's low, you get an enormous move, right? And this was the last time we had like an inside day after a big move. Well, here was a big move, and here's an inside day. So on this one, you had one big move down and one big move up. So this is like a little acorn that's ready to grow into an oak tree or collapse in a fiery burst. My bet is up. So I like the Tesla critical state. Got our renewed interest now in Brazil. I'm assuming from this frame that this trader only wants to go long and looking for really a break above the 2-day high rather than the 1-day high. I don't disagree with that. At 37.50, it's a nice round number. A second position at the breakout of Z1, that's fine. Third position, halfway to Z3, and probably a fourth position and an upside target of 41 right there. So this would be 3. This would be 4. I like that. Yeah, so we're looking at the daily on this one. I'd like to frame the other side to see what everybody else is seeing. We got this has been such a long and strong move that you notice that half the dragon is out of the river, and when you count up the PSAR dots to the upside, you 1, 2, 3, 4, 5, 10, 15, 20. That's 25 days of uninterrupted up. And if we say that the reversion to the mean is the least surprising move, and if that's at 33 and it's at 37, that's really $4 to the downside. So if I wanted to be short this, I would have to be, and I was maybe right there. That gives me 1 unit of risk, 1 unit of gain, 2 units of gain. That gives me a 2-to-1 play to here. So if I were to be short this, I think I would have to see, if I'm playing the other side of this, there's two ways to play it. A conservative short would wait for a breakdown below the dragon, and then you'd have to have a tight stop right about here, or even the top of the dragon, in order to have 2 units of reward down to your target. And so I think a break here, because that would negate, this entire range. I think this is justified at about 35 and a quarter, and then you'd play for a target here. And then if that failed, you'd want a second position as a swing going south of that. But meantime, on the short side, day only with hybrid frog technique and no swing short until it breaks below 35. And then your target would be 33. And then second target would be 30. So that's how I would play it. And this is a frog champion, which means that it's very directional intraday and directional on a swing. And you can see that. I mean, 25 days in a row of uninterrupted upside. And, here's where your PSAR flip happened. And so, your entry on this would have been down here around 29. And if you had the PSAR stop the whole way up, never even challenged. You could even have had the southern skin of the dragon all the way up, for that matter. That's what a frog champion looks like when it swings. And this is why you want to pay attention to the changing of the seasons: winter, spring, and summer. I did that one, sorry. All right, next up is 3M. So you could almost look at this one as a visual box trading. Because what you have here, the space between the PSAR flips is really the range of uncertainty, if you will. So this is where the trader drew his yellow box for the daily risk. But I might also say that on a swing trade, that would kind of be your swing box. That if this got above 177.10, I would be interested in this one, not only being the second day trade position, because I think what he's got here, I can't tell from this whether he wants that as an entry, and then this is the second entry, and that's the third entry, which I would not disagree with. And then on this one, because of where those PSARs flipped, and it's above the RL10 real price, this is the price where I would pick up the swing trade. So if it broke above, this looks like 177.10, then I would be adding, or I would be keeping 1/5 of the day trade position and whatever I'd earned on the way up as a swing trade to continue. On the downside, this looks like he's not betting against 3M, but in my view, if it breaks below 170, then I think that's where you could consider a swing trade here. because your next target's going to be down here at 160, and that's a $10 range. So if you could be short at 170, then your stop would be about here at the top of the dragon, and then that would be your risk, and then you'd have 1, 2, 3 scoops to the downside. So that's possible. So I like 3M. Materials have been so strong, I understand not wanting to get in there on that, though. Okay, here's Win. And this one, to me, illustrates very nicely that whole idea of the visual box trading, that this has been in a pretty strong upward move for like 30 days. But, sorry, for the last 1, 2, 3, 4, 5, 6, 7, the last 7 days, it's done nothing. This is failure to follow through. Almost feels like a plateau. And I think you could see if it fell below this about 109, that, it gets triggered by the support levels have to hold. That's the skin of the dragon, the PSAR, and then if those fail, there's no resistance or no support until 96.50, and that's way back in here. And then if that fails, I think you can see that this is in play, and then if that fails, it runs through the gap pretty fast down to 80. So although he's got the markups here for peak of the RL10 and then Z1 or the Z2 breakout for a third position, I presume. Here'd be 2. I think you can make the argument for Win to the downside. And I just think that the COVID raging out of control during a transition time when nobody is taking any kind of effective action, and the only thing that can happen with the vaccines in the early stages is going wrong, you're going to hear all kinds of news stories being emphasized if there's anything remotely wrong with the delivery of vaccines, because that's the last chance that they have in the media to pin that on Trump. So you can expect a real emphasis on negative vaccine stories now. So I like Win. I see a strong case for the downside as well as the upside. And I just think the downside is more likely to do better. Disney is a reasonable effort now. What's the wrong? Keep getting the wrong chart. Sorry. Disney's up next. So the problem with framing Disney on the daily charts, for swing trade, and that's not, we're not just doing swing trading here, but we're really looking at the day trade for starting tomorrow. Is that this 13% gain, featured this great big breakout here to the upside, a big run up, and then a micro sell-off. So he's looking, I think, going from a breakout of the real body, I think is sensible, instead of waiting for this to break, and they're going to add a second position there, and then a third position, I assume, is a multiple of that box, and then a fourth position at 190. So this is like, these are the round numbers on the $5, 180, 185, 190, and that seems reasonable. If you take a look at the last 3 months, all of the big earnings surprises, and even in the market itself, everything, when things were marking along like this, and then there was a big surprise, every case in our symbols, there was a sharp sell-off before a recovery. So I think I would actually prefer that instead of being short here, I think I would want to have an intraday box that looked like this, and I would try to get short intraday here at about 172, so that if it did break down below the gap up, I could add a second position, and then I could add a third position at the breakdown. I want to try to get this. If it has this phenomenon again where it falls off the ledge, that I can then figure out how to do a supported spring crossing if it holds support here, and then I can play this long side trade back up to where that gap up was, right? And then add more positions if it breaks higher. So I want to try to break this into two phases: a sell-off from the gap up, and then a long-term grind up on the basis of the improved earnings estimate, right? But I'm also mindful that in this yellow zone there might be some good day trades as it goes back to, if it were to go back to the Bollinger Band mean, which is all the way down here at 140 as a target. So I see plenty of opportunities on the short side on this one. That's just been the case of all the gap. Here was the last time it had a big gap up, and so you had a sharp sell-off, but it held, and then off it went up. So that's exactly the pattern that I just described that may be repeating it here. You're not allowed to be surprised if that happens again. Even after this gap up back here, although there was no sell-off, there was a moment of sell-off which would have allowed this kind of standard trade in here. Yeah. So Disney is certainly in play. Next one up is U.S. Steel. U.S. Steel is problematic. It and the material sectors have been so good, but to me, this downward slide, even though it recovered nicely, that's really in distinction to this gap up and go, and until otherwise informed, I really don't adopt a long side swing bias until it gets above that previous move. And so my concern on the downside for this is that the PSAR is way back here at 1550-ish, and the Bollinger Band mean at 1275, and the long-term fair value at 9. So this doesn't feel as much like an opportunity to hurry up and get long for the swing trade as it is as the first warning of a return to normalcy, if you will. Having said that, I like this intraday because it is clearly in play, and it trades with a lot of volume intraday, and it's bi-directional intraday, so that makes it in a critical state. Because the big sell-off, there was clearly buying pressure on it down here at 1750. So you could imagine how all it's got to do is move up, 20%, and then off it goes up into swingland. So I like U.S. Steel in both directions, and I like that trade frame you've posted. That works for me. Next up, oil exploration. Inside day, because here's the previous day's high and low, so we've got a nice tight inside day, and that makes it like coiled spring ready to break in either direction. So here's the low of the day, the 2-day low for a second position, re-entering the river for a third position, and a PSAR break for 4. Yeah, I like that. And when this thing sells off from overbought, it went from 60 to 52. That's minus $8 on 60 is about 15%. So a 15% recovery here would get it down into here, and then it's free and clear and running all the way back to the Bollinger Band main. The recovery in energy, though, has been substantial for the last 2 months, and so it just may be that here's the turning point in the sad news about oil. If there's a glut of oil, you don't need so much oil and gas exploration. I mean, the future of this thing, if we start looking at mandated electrical energy, longer term, we got to be concerned about a sea change on this, but that's not going to happen for a while. But that is out there. That's a real thing now that we haven't had to contend with in the past, but it's now a thing. Next up, Bitcoin. All right, standard trade frame on the daily bar for the first entry. Second entry takes out the peak of the RL10. Third one takes out the all-time high. And then this takes out, let's see, 1, 2, Z3. Be easier if you did that in red. So Z3, yeah, I don't disagree with that. And this thing can have those nice range expansions too. After it consolidates for a while, it gets a nice move. And this was the consolidation, and it's still early in that move. And then these are the price levels that it has to get through on the way up. So downside, this would be persuasive. The breakdown of Z-1 would be almost even decisive, because then you can see how that gets to here pretty quick. And the RL270, and then also the peak, or the lowest point of the PSAR flip. Yeah. So it's still in play. And it's a serious contender for short-term trades as well as swings. I don't disagree with that one. Honeywell, just my quiet favorite here. I love this one because we have a range expansion, day Friday. We've had a nice, let's see, 5, 10, 15, 20, 25, a 27-day move on the basis of them being added to the Bollinger Band mean. This is sort of the argument for your supported spring crossing or supported fall crossing. You get the PSAR flip, and then a breakout of the previous Z3. And this is that idea of the big gap off, sell off, and go. It's been quietly grinding all the way up, and one of the stronger tech companies So I like this at 215. This is a conservative way to approach it, but I don't mind that at all. Get your second position at 225 and the third one at Z3. That works fine. This would be one of the last companies that I would want to get short. There's just no argument why. They're not crazy. They just quietly attend to their business. They're a tech company, but they are well diversified in mature industries where their technology adds value to their customers all over the place. Very well run company. Love them for the long term, and I think that's a place you can continue to support them right there. Salesforce, their other partner in crime. Now this is the case where a high tech company that's all digital all the time and cloud and all that stuff, gets notified they're going to enter the S&P 500, but they don't have that same kind of pedigree and earnings in the bank, so they get a big gap up here, and all they've done is close the gap, and so you get a nice tight room in here. It's ready to collapse at 220, so we've got some short side trades here, so you'd have two positions on by the time it went to 215, and then coming back to this support level is a reasonable downside target. But if it can get above 230, you'd have these two are in hand, and then and only then do you add a second position. I like that. And then your long-term fair value is here. And you don't get serious resistance, I think, until you get into this zone. So this looks to me to be the sweet spot for tactical opportunity. If it can get above 250, though, and then 260 is in, and if it gets above 260, all of this is left behind, and you're going to see some of that kind of explosive move. But first things first, I see the tactical opportunities in here first, and I like the step-by-step approach. Next up is PBW, our clean energy buddies. There's your resistance zone, and it's in the bottom half of that, but it is held at 88. It has failed to fail, so this is failure to fail further. So that's good. This little piece here was failure to follow through. So you're thinking that it's going to go up, but it hits that cap there, and then it doesn't. So when it can't go up anymore, it doesn't, and it comes all the way back down to the measured support level. And now it failed to fail further. So I think you can buy it here at 91 or 92. And then if it does manage to get out of this restrictive zone here at 96, then add your second position, and then it's really free and clear. I almost would drop that to 100, because that's a round number that'll get people's attention rather than waiting the extra $2. I think I would go at 100. On the short side, I guess you're getting short at 88. I don't disagree. With a second position down here at 82, that gives you $6 of potential gain on the short side. And then if that fails, then here's the next obvious support levels down here at a combination of fair value and Z-1. So that looks pretty good. So I like that on a longer term basis. Palantir, this is more in the tech IPO space. And so it's still got a lot of IPO juice on it. People trying to make their fortunes, like as in this run up here. That's the eternal optimist from 21 to 34. So that's about 50%, I should say. And then 1, 2, 3, 4, 5 days later, it had given it all back. So now you have this box to contend with. So now we're nice and tight here. I like the break. Wait for the break of the PSAR. I think that's reasonable. So short at 25.50, aiming for 21. That's $4.50, and you have about a $2 stop there. So that's at least 3 to 1. That's legit. And then if it does break out from here, you can see how on these kinds of buying days, it could easily get up to 31 without too much effort. And if it can get above 31, I would take that as really, really positive, and that's a good second position, third position, fourth position. Yeah, I think I would pay attention to that one intraday. That's one I think you could put on your short-term intraday target list. Last one. This is the global clean energy. So this is an equivalent to the PBW, but maybe has a greater exposure to the global shares and not just the ones that are dominated in PBW. And this is really the same. This is really the same frame. So this is part of a global movement. So again, you have that nice long, steady slog. This was failure to fail further at 23, and the rising prices of the last couple days could push this out and beyond. So if it gets above here, that little series of position builds for the swing would be nice. That's one I think if this has enough volume to trade intraday, you could. I know PBW has lots of volume, so it's very liquid intraday. I don't know off the top of my head if this one does, but certainly on like a swing trade on daily charts, those are reasonable. That'll get you a position there pretty quick. And when that thing goes, it goes pretty well. Here's leg 1, here's leg 2, and you're hoping for leg 3. Okay. All right, that's everything I got for tonight then. Make sure you get some time, listen to that video lessons from yesterday. I thought it was pretty well done. It would reward your time. All right, that's everything we got. We will be prepared for tomorrow. We'll see you in the chat room, ready to rock.